The day we have all been waiting for. It is the FOMC rate hike decision, which is coming up, and it's an important economic day. You can see that the crypto market is at least calling for a 25 basis point interest rate hike, which is what we expect. It is the major predominant expectation for today, and that's why you can see from the crypto bubbles charts over here on the daily, pretty much most coins are running, and one of the outliers is XRP, which had a massive move. So we have a lot to cover today. I'm going to try and make it a pretty quick show. So let's get straight into it. And I want to start off over here with the calendar, which shows you that's going to be coming up at 8 p.m. my time. I think it's 2:30 p.m. your guys' time if you are in the US, and that's going to be the FOMC statement, federal funds rate. Remember that they're also going to have an update on that whole dot plot thing. The dot plot shows what the expectation is for the future interest rate hikes, and it will provide us with a whole lot of information going forward. So a very important day indeed. And you can see over here from the CME group, you have an expected 89.3% expectation for a 25 basis point rate hike, and only 10.7% chance that it's going to be no interest rate hike at all. So most likely we're going to get 25 if the Fed doesn't come in and surprise us with any bad news. So a 50 basis point rate hike, then pretty much I'd say the market's probably going to remain flat and slowly continue to grind up. And after this, we don't have any major economic events following this, which means that if all goes well, it pretty much should bring some good risk appetite back into the markets. So here you have TED Talks FOMC scenarios. He says 50 basis point hike is an outlier. It's obviously less likely, and short risk, if that happens, you would want to short risk assets, and the bear trend will likely resume. So really you would need this to happen in order to break down structure. I would say any pullbacks that happen independent of a 50 basis point rate hike. So if we don't get 50 basis point and the market pulls back, that's going to be a buying opportunity and provide you with the chance to get into the market. So 25 basis point hike, he says, is the most likely. It's a nothing burger. The dot plus the press conference will dictate the next market move. If there's a pause, second most likely, because there is a lot of pressure on the Fed to pause at the moment, with obviously the banking crisis and the whole economy really struggling in that environment. Then he says get very long on Bitcoin. And then if there's a cut, that's an outlier on the other end of the spectrum. Then he says mortgage a house and buy Bitcoin, because then we're absolutely going to rip. This is a drunk image of Michael Saylor over there when he was telling everybody to mortgage their house and buy more Bitcoin. I think that was back at like 58, 60K. Okay, but in all seriousness, statistically, what do we have as main reasons to be bullish? Well, we have a couple of things, and I've covered this ad nauseum for a long time on the show, which is why we didn't miss any of this move. As a community, we've done phenomenally well. If you made money, please make sure you hit the like button, smash the like button. Remember that Josh gets paid 25 cents per like. Yesterday, I think we got 3,000, so he definitely banked some bucks there. He's getting paid this month. Okay, cool. Monthly stochastic RSI flipped bullish and it closed above 20. We did cover that. Monthly MACD is close to flipping bullish. We've covered that. We broke above the 5-day Gaussian channel. We've been focusing on the weekly one, pretty much the same. So we've covered that. The weekly pi cycle bottom has flipped bullish. We also covered that. And then he says here, reasons though to be bearish, you're listening to the media. And really pretty much everything is in the bull's court at the moment, other than a little bit of resistance that's at 30. Okay, I shouldn't say a little bit of resistance. It is quite major resistance that's around this 30K level. That could be a bearish underside retest. But nevertheless, if you have a look over here, it is all in line with what he said. Stochastic RSI crossing up. RSI has reclaimed the moving average. A monthly close over here would be absolutely phenomenal. It means that the yellow moving average will start to cross over. That gives a lot of momentum for the MACD histogram to continue to strengthen and move up. And then once you cross the zero line, it's really going to be off to the races. And that should provide enough momentum to crack that major 30 to 33K resistance zone. Okay, Gaussian channel on the 5-day, you can see, as he said, it has now closed above. So that is a positive. We've mostly been focused on the weekly one. So let's look at the weekly. Based on the close that we've had, it means that you can pretty much target the top side. Remember, also coming in at that major resistance, $33,000. So we have covered that. Okay, pi cycle bottom. Here it is. Yes, price went lower. I highlighted the reason why. It was because of FTX, right? black swan event can lead to major sell-offs. Otherwise, everything on-chain would have suggested that actually the bottom should have come all the way back here when the pi cycle bottom indicator flash. On-chain metrics were all indicating that June was meant to be timing-wise the major bottom. And then in hindsight, you know, if you look at everything on-chain as well, the bottoming process will be more obvious than ever before, because you have historical data that you can compare to, and you have the halving epochs from cycle 1, 2, and 3, and pretty much everything is in line and following the timing cycle exact. Then you have the MVRV score over here, which we've also covered a lot, and you've come out of the bottom sections in exactly the same way. Once you start to leave the green lower band, that suggests that prices are obviously oversold, and it's an opportune time to get into the market. There, it happened in 2015, happened in 2019, and then once again we are leaving the race here. So you can see this area over here was an opportunity to get back in. That's when Bitcoin came down to 19,000, and we got those entries at 19.5. Okay, let's see quickly. We're testing a new streaming system, by the way. Let us know in the comments. How does it look? You can see I'm in the screen over here. I'm in the screen. I can touch the chart. It's quite amazing. Okay, also looking at the spend output profit ratio, you can see that is also at historical low levels, and it's reclaiming that 1 point mark over here in the same way that it did before all the other previous cycles took off to the upside. That is using a 30-day moving average. That 30-day moving average is crossing back up. So another healthy sign. Then you have the hodler ratio, exactly the same thing. Hodler ratio, same print, same levels that were reached in the previous bear market. So all in all, it is looking good. And Michael, who's a CFA, which means that you absolutely have to trust him. If somebody's a CFA, they know the markets really well. Let me know in the comments, are you a CFA and watching the show? He says, bears should be out of their mind scared. None of this shit broke the stock market. That's how irrational exuberance happens. That's how bubbles happen. And then he says melt up at the bottom over here. So he's looking for much higher prices. What I would say to that is that obviously we like to buy support and sell resistance. And yes, we're coming into resistance. What that basically means is that, of course, you do need to be cautious coming into resistance, and you don't want to get overly bullish at these levels yet. But what he's saying over here is very, very important. And we also covered this a lot. I said to you that the most important point, I said this probably for 3 weeks in a row about a month ago. The most important point that I can't even emphasize enough over here is that despite all this news, right, you have a banking collapse, you have exchanges going down, you have so many things that are going on in the economy, raising of interest rates constantly, and yet prices are not breaking down. So the magnitude of each sell-off was becoming less and less and less. And I would say that today, or let's say this week, because there's also important data coming out on Friday, but if crypto can hold up at least above 25K by the end of this week, then it's passed its final test. This is really, to me, the final test over here, the final boss. Let's call Jerome Powell the final boss that crypto must face, and it must pass that test. If we can get through that test without making bigger or at least creating bigger sell-offs, a higher magnitude sell-off based off what we saw from FTX, as well as the exchange crisis that was going on the end of last year, and as well as Luna, then it means that it's showing you strong signs that the market is changing direction and it's looking to move up. I mean, people want their risk appetite to be back on the table. And if you use the 4-day chart over here, we now have a confirmed breakout. I've told you guys, this is now for the extremely conservatives, right? We had the breakout levels, the white line over here. This candle, 4-day candle, smashed up, broke close to the upside. I said if you want ultimate confirmation, you would want the next 4-day candle to close above that candle. And if you look at that, you've got it. So any pullbacks that happen from here are just opportunities for you to load up, in my opinion. Whether you should touch altcoins yet is another story. We're going to get into that in just a moment's time. I'm talking purely Bitcoin. Okay, the stock market, you can see the downtrending trend line that's over here that's been holding price down. And then we identified once we started to break out of this that we're more within a range, which is denoted by these orange lines over here. So you can see yesterday the stock market had a decent day, a nice wick off of the mid-range, the orange line over here, the mid-range, which also happens to be that down-sloping trend line. Bounced off that level. Now we're coming into the 0.75. Your next target is, depending, of course, on what Jerome Powell does today, you want to see a push up into the range high level. If you can push up and start to close above this range high over here, then bulls will eventually break out of this range. And once this range gets broken out of, then a proper uptrend starts to get established. But for now, it's definitely higher low after higher low. So we can probably confirm that as a higher low. We have another high low. So 1, 2, 3. So all's looking good over there. And the only thing that can ruin this is whatever the Fed does with the interest rates today. But I found this chart over here very, very interesting. So 𝗕𝗆𝗄. This chart is crazy. Made back in 1875 by Samuel Benner, showing periods of panic. Good time to sell assets and good time to buy assets. Absolutely mind-blowing that he predicted so many events, really telling. I don't have the source. Someone sent it to me is what he says over here. And it's been signed by him. Really, really old school. Look at this. I mean, he predicted all the major bottoms within the markets. And it's just super interesting here. You have 2023 again showing that it is potentially a good time to buy. Strong bounce up where you'll come into the mid-level where it will do decently. And then he's showing here a big pullback again in 2032 and then off to the races after that. So interesting. I just think it's interesting. Obviously, we can't trade off of that, but I thought it's worth showing you. Okay, Preston over here is showing something interesting as well. The Zero Hedge said that Silicon Valley Bank and Signature Bank were just the tip of the iceberg. And basically in this article suggests that there is a mega banking crisis that's still on its way. And that's why you have 𝗍𝗍𝗶𝗍 sounding the alarm, saying that it's time to really consider building massive Bitcoin positions and pulling those Bitcoin off of exchanges. So Preston replies over here and he says that the total capital buffer in the US banking system is 2.2 trillion, while unrealized losses are between 1.7 and 2 trillion. If banks had to liquidate their bond and loan portfolios, they'd actually lose 77 to 91% of their capital cushion, highlighting the fragility of most banks. 186 US banks are in distress, which is a lot of them. Remember, most of these banks follow the exact same process when it comes to investing and what they do with the money, buying government bonds and yields. And therefore, they're all in the same, they have the same problems here. They're in the same troubled situation. And if one or two collapse, there's a possibility that more of them could still go down. So today's interest rate hike is going to be absolutely critical because this affects the bonds, right? The yield curves on the 1 month, 2 month, 3 month, 1 year, 10 year, 30 year, etc., etc. And those are the bonds that these banks bought. So if they continue to raise the interest rates, it means that pretty much people are going to continue to want to withdraw their money because they can rather just buy the bonds themselves and get the return on investment a lot quicker rather than waiting from the small interest rates that they get from the banks. And therefore, if the Fed were to pause or completely pivot, then it means that maybe these bonds will go back into check the way that they should be. And essentially that gives banks the opportunity to get a bit of a breather and hopefully they don't collapse the whole system. So here's a regional bank insider. Look, obviously, I don't know how reliable the source is. I mean, he's literally anonymous. He's an account track inflation and he says regional bank insider. But he does say we can assume that it is probably true considering all the information that we now have. And he says, I'm the CEO of a well-known regional bank. My bank is on the verge of collapse along with the entire banking system. If the Fed doesn't lower interest rates this week, there will be extreme pain for the world. Bank runs and the complete halting of credit markets will occur. Mainstream media refuses to talk about this. So there you have it. I mean, look, again, I can't verify this source. There's no way I can do that. He is anonymous, probably for a reason, but it does make sense. It does make sense, and it seems possible. And right now we're going through major currency wars. There's a book called Currency Wars. I read it many years ago, and it's incredibly interesting. So we don't really have, World War I, World War II vibes where everybody's bombing each other like back in the day. Now, modern day world wars are fought by devaluing other currencies. And this just came out over here. And this is all part of currency wars. So, and I mean, Bitcoin is probably the best currency to be in, right? It cannot be devalued. It can obviously be affected with downward pressure in other ways, mining bans, things like that. But ultimately, it's scarce. It's the scarcest and hardest asset in the world. And therefore, this is why I'm pro Bitcoin. And currently, I'm still in Bitcoin. But if you look at this, breaking news, Russia is to use Chinese yuan instead of the US dollars to conduct trade with Asia, Africa, and Latin America. The decision will mark the end of the petrodollar era and the beginning of the Petro 1 era. So if you have a look over here, here it is.
Я уже говорил, уже 2/3 товарооборота между нашими странами осуществляются в рублях и юанях. Мы за использование китайских юаней в расчетах между Российской Федерацией и странами Азии, Африки, Латинской Америки. Я уже говорил, уже 2/3 товарооборота между нашими странами осуществляются в рублях и юанях. Мы за использование.
Okay, cool. So you've heard the whole story. There we go. That's straight from the horse's mouth over there. The horse being Putin. Hopefully I don't get assassinated for calling him a horse. But anyways, let's move on over here. What does that mean for the dollar? I mean, that means ultimate devaluation. And you can see over time the purchasing power of $1 and how that's changed. So you could have bought with $1 a Hershey's chocolate bar. 30 of them actually in 1913. Now to get one, you need $26.14. So toilet paper, 10 rolls was $1 in 1929. And we know after I can't say the word because then they shadow banned the channel. But after the lockdowns that we had, toilet paper is back in demand. So there's money in toilet paper. And nevertheless, over time, basically, you can just see the devaluation of the dollar, the purchasing power goes down. So you have to consider, even if you are buying something like the S&P 500, which gives average returns of, what is it, like 8-9% per year, ultimately, that compounded over time, it's still tough to keep up with the purchasing power rate. Yes, the nominal rate of your interest earned and the nominal amount of dollars that you hold is increasing over time. But how much of the purchasing power are you holding? If you look at a chart, obviously you can just put BTC USD, USD BTC as opposed to BTC USD, which is a chart we usually look at that goes up. Then you'll just see a picture that looks like this. Pretty much USD BTC would just go like this, straight down to zero. So it's showing you that over time, it's probably better to be holding hard assets. And you can see the currency wars and the way they're playing out. Maybe this is part of what happened with Putin and China's relationship that they've just built over here. You can see the dollar breaking down below the key area, the key yearly level. And these yearly levels are very serious. You have to take them seriously. We had a big push up over here. This was the main range. And we showed broke below, rejection, 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 and now it is starting to break down over here. So I'm not saying that the dollar is going to collapse per se. That's not necessarily my narrative, because I know that these guys are very smart, right? They play these war games where they essentially have plans on how they can devalue other currencies. And 𝗕𝗏𝗍𝗍 outlined in a fantastic Medium article exactly how he thinks the US will do this through oil reserves and using Europe to basically sell or print euros and sell those euros for USD, and therefore the dollar will get pushed up. So a very, very interesting state of affairs over here. I'm definitely not into politics or necessarily even macro, but I can recognize what's going on over here, and it just means good things for Bitcoin ultimately. Okay, next over here, this is what 𝗿𝗆𝗍𝗍 says. The infinite money is here. How we got here is a matter of history. The question is how to get out. The Fed is launching their CBDC in July. You have about 90 days to exit. So this is crazy. Did you read that right? The Fed is launching their CBDC in July. You have 90 days to exit. After that, you're trapped in a devalued digital dollar. It'll be digital lockdown or Bitcoin independence. Look, I know there's some of you out here that probably have huge amounts of wealth, and maybe you're a lot older than me, maybe in your 50s, 60s, and you're nearing retirement age, and now you're sitting with a whole lot of dollars. I'm not a financial advisor, and this is not financial advice. I don't want you to now go and panic sell everything that you got based off what I'm doing on this show. I would recommend do your own research and find a way to hedge. At least having a little bit of Bitcoin could be one way that you can hedge. I'm not telling you to put all your money into Bitcoin, but if what he's saying over here is true and it's not hyperbole or exaggeration, then this is something to take very seriously. And it seems like they really are planning on launching a CBDC, because if you look over here, this just came in. Texas Senator Ted Cruz introduces a bill to ban the Fed from adopting a central bank digital currency. These CBDCs are serious things, guys. Just go look at what it's like in China. I mean, they can literally, if you do something wrong, anything wrong that the government deems to be wrong, then they can basically halt your bank account. That's it. What are you going to do? I mean, it's absolutely insane. They can literally withdraw your funds from you. And that's a scary, scary place for society to be moving towards. So back onto Bitcoin over here. Dominance is moving up, but obviously we still have a little bit of degen within us, and we're looking to obviously make outsized returns on altcoins, right? So if you have a look over here, we are approaching the range high. Let me just quickly see that Swanee comment. Okay. I don't know if James can get it back. Guys, we're experimenting with a new software, so I am just trying to see how it works. So usually I have my comments on this side of here. I can see everything you guys say. Okay, no, don't worry. We'll continue on with the show. We'll get used to this. Let's keep the show running. So you can see Bitcoin dominance is approaching range high. I've told you every time once we approach this level, either you're looking for for this to turn before, or it might push a little bit higher and deviate and come back down. But there's additional ways that you can use other charts and information in order to determine where the altcoins are going to run. So we're really getting close to that time period. It could be a matter of days before altcoins run. And I think that the safest thing to do is definitely just to wait for whatever happens with the interest rate hike today. And then you can see following that. But another thing that you can look at is Mercury says it well over here. Typically, you can use the BTC dominance and 𝗬𝗍𝗍𝗍 as a general portrayal for when it's okay to start rotating your favorite altcoins. You want to see weakness on Bitcoin dominance, right? We're getting close. We're approaching the range highs. And then you want to see strength on 𝗬𝗍𝗍𝗍. So if you look over here at the Bitcoin dominance, obviously it's been straight up, right? He's using a low time frame chart over here. 15-minute chart with just two simple moving averages. Basically, you'll be looking for a distributive sign over here. So if you're on a low time frame, watch to see if this starts to distribute and it falls back below those moving averages and you get the moving averages to cross down. That could be a potential signal. Then you want to go from there onto the ETH chart as well, the 𝗬𝗍𝗍𝗍 chart. You can see over here, straight downtrend, right? Same thing, you're looking for a little bit of sideways motion first, and then for the uptrend to start to begin. Once that starts to begin, then of course altcoins can do phenomenally well. You don't want to front run and get in too early, so be careful of that. And here's the ETH chart. Find it interesting? 𝗬𝗍𝗍𝗍, excuse me. Let's look at 𝗬𝗍𝗍𝗍. So you can see the clearly defined range, right? Range high, mid-range, range low, and then you have a nice trend line. Let's zoom in. You can see we are coming directly into that trend line right now. So it is possible that already we are approaching that turn because, right, you want to compare this. There we have it. Bitcoin dominance, range high, meaning it's coming into resistance. 𝗬𝗍𝗍𝗍 is coming into support. If this support level gets lost, then yes, it can go down a lot more. Then you could be talking all the way down to that 0.051 level for the 𝗬𝗍𝗍𝗍 chart, which as a percentage wise is still down anywhere between another 15 to possibly even 20% down against Bitcoin. So watch to see the reaction over here. If you do have this chart on, if you do have 𝗬𝗍𝗍𝗍 chart, draw that trend line like I have it, and then just watch to see if you can start to reclaim these levels. Again, you don't need to be too early. You don't need to front run this. Just be patient and wait for signs of change over here. Wait for a break of structure, and then you can jump into altcoins. Okay, next over here. The altcoins, at least, or that have done well against the BTC pairs, is the following over here. So you have a whole list. You have XRP at the top. This is just an indication of what could potentially happen within the markets. You know that the returns can be outsized when alts really start to run. Now, I thought one way that we can kind of identify where alts are within the overall landscape and if their trends are changing at least against the US dollar pairs, then let's look over here at the Super Guppy indicator. We know that for Bitcoin, it had flipped green quite a while ago and it's been working phenomenally well. But let's have a look. I use this also just to kind of give me a quick overview. So you don't need to get like too precise on all your charting. You just put the Super Guppy on. It's an EMA ribbon indicator. So all of these are a conglomerate of different exponential moving averages. I have it on the daily chart. Green is good, red is bad, right? So cool. ETH, green. GMX, green. Litecoin, still, this is like Bitcoin's fake out, right? You had green first and then it printed gray. So probably could still reclaim, lagging. Same thing on Compound. Solana is soon to turn green. Solana has a lot of key resistance to get through overhead. Once it breaks that, I really think Solana can get going. Atom is still under pressure over here. It's got gray gray, so hasn't turned green yet. The trends haven't established. GNS has a beautiful trend. This one has pretty much held you in. If you use this since $4, you're up over 100% on that. Okay, Vulcan Forged, flipped red, turned gray again, waiting for it to turn green. This is these are for the trend traders, right? I'm showing you this not for the short-term time frame traders that are trading as a day trader. This is more for the guys that want to swing trade and hold investment positions. Filecoin, okay, flipping gray again, might turn green. Link, okay, Link is slowly contracting over here. I mean, this one's been contracting for a long time. Had a little bit of green, turned gray, wait for this to flip green. Vela, okay, too young of a chart, not enough history, we can't look at it. Okay, dot, gray. So you can see some of them have started to turn green, but a lot of them are still gray. I'm just going to flip through to give you an idea. Okay, 𝗍𝗏 is turning red, so it's lagging. 𝗍𝗏𝗄𝗧 still red. The point of this exercise is to show you that you're not late. You're not late on altcoins. That's what I'm trying to show you over here. I'm still clicking, guys. I'm going through all of them. I just want to show you very, very quickly. You are not late. Gray, red. Some of them have, if Bitcoin's really going to break structure, and this is not just a big deviation that's going to come back into the range, you have so much time. It's not too late to get into the market. There's going to be so many opportunities. So you can see here it is. A lot of them are still gray and yet to turn green. It's just a few more. Go through. I may as well finish this whole list. We're almost there. Dogecoin, Gala. Okay, that one won't work. It's too young. Hex. Hex has been pumping. I know the Hex community are very, very strong. You know, one reason that Hex is pumping is obviously because they're anticipating the Pulse chain launch, and they're hoping to basically get a copy of what would be pHex, so Pulse chain Hex on the Pulse chain network, as opposed to eHex, which is Hex on the Ethereum network. So I think that the mechanics of how Hex will work is exactly the same on the Pulse chain network. And obviously, you know, Hex did very well if you got in the seed round or the ICO phase. And basically, I think that the more Hex that you own now, you obviously get a copy on the pHex platform. So that's why Hex has been doing so well, for those of you wondering. Okay, Anchor, green, Casper. Casper has been phenomenal, guys. Casper's probably been one of the best performing coins of this year. It was outlined by one of our team members and community members. His name's Kiwi. So big shout out to you, Kiwi. Well done. You got it spot on. And I gave this pretty much last year already. I gave this last year. Once he outlined it to us, we put it on the portfolio list, and I told you this would be one of the coins that I'm buying. So I think that's enough over there for the altcoins. Let's move on over here. Liquidity. What's going on with liquidity? Well, honestly, not much. Not much has changed over here. We're still waiting for a strong and sustainable uptick in the liquidity. You can see for the most part, the liquidity is just kind of consolidating in no man's land, pretty dry. And there's not much that's going on over here. So most of the Bitcoin run is probably by stable coins that have already been within the crypto ecosystem for a long period of time. So it's not an influx of new deposits into crypto. I think it's just sidelined crypto money that, like for example, myself, that I sold near the top, and I've pretty much just been waiting for the turn of the market. And now that we've had that turn at least, then people are starting to deploy into the market. Okay, Coates moving averages over here. Again, we are looking at one possible push higher. If this can get just a little bit of more of a squeeze, which would take us to around that 30K level, then I would like to take some profits up there and re-add lower. There is definitely going to be a pullback, guys. It's guaranteed. There's going to be a pullback. It's just a matter of when and how deep does it go. So one thing that I'm looking at to determine the timing is also the RSI over here. So if you have a look at the RSI, it's going to turn down. Remember, this number changes every day. If it were to happen today and price were to come back below 27,284, that would turn the RSI back down. So that would be an opportunity to start to get out of your positions and just wait for the RSI to go wherever it's going to go, however low it's going to go. And then once the RSI starts to cross back up, meaning the momentum is towards the upside, then you can kind of get back into your position, right? So an increasing RSI generally indicates that there's strength, right? It's the relative strength index. It's showing that there's strength in the bull's court. If it turns back down and prices are trending towards the downside, then pretty much you don't want to be holding your positions until such time as it turns back up again. It's quite simple. I know it's difficult for people to understand, but you want to buy when prices are going up and you want to sell when prices are going down. I know it sounds crazy, but that's typically how this works. And today we have a bear moon that is going to arrive, so it'll be interesting to see how that plays out. Levels that I'm looking at over here is I am looking at this moving average, the blue one over here, which is the 9 EMA, the exponential 9. The exponential moving average 9. Look at that for pullbacks. So you can see the way that these levels line up over here. I do want to raise this a little bit because this is the level we're looking at as the major breakdown point. So if prices got below 26,683, then we would say pressure's really aggressively going to start to move to the downside and you might go much, much lower. So I want to move it up in line with what that RSI showing, 27,278. 27,278. Let's put it in exact. Oh. Okay, 27,278, and we kind of raise the bar. Let's see. So we'll keep track of that, see how that works out. This could be a potential area where a dip can, where a buy the dip opportunity can be formed. But at the moment, price is just grinding higher, guys. It's not breaking down yet. Of course, there's going to be volatility with the FOMC today. And if you do see a quick spike that comes into the 9 exponential moving average, the blue one, that could provide an opportunity to get a quick entry. But buying right now is probably not recommended. I don't know if I can advise somebody to do something like that because we are coming into resistance. If you missed the whole move, it's another story. I just want to remind you what I said yesterday. I said to you guys yesterday that, remember, I bought pretty much I put most of my portfolio in over here. So I've ridden this whole move up, and when strong trending moves start to take place and Bitcoin really starts to reverse trend, then the dips happen very, very quick. So I want to be careful with how much I sell. I want to, for the most part, hold as much as I can. And only if we really push into that 30K level, then will I start to consider to take some off the table to re-add lower. But for me to sell over here, there could be a spike that comes down and happens so fast that I actually end up buying higher. So if you've been holding since there, it's probably best for you to continue to do that. If you have additional income, obviously you have a job, you get paid at the end of the month, rather consider using some of that money to re-add on the next pullback and give this trade a chance to really develop. This is swing trading at its finest, right? We've taken a beautiful swing, higher high. Eventually you're going to pull back and you're going to form a higher low somewhere. I would like to see 25.4 hold and to form the next higher low. And then once that higher low forms, that's just an opportunity to get more in, and you expect that trend to continue to the upside. So that's from a trend trading perspective. From a range trading perspective, you can see definitely we're coming into resistance over here. That's from the order block, the breakdown level. So it is possible that you're going to get some deviations over here. This opens the door for low time frame traders. Those of you who are looking to short the market, what you'd want to see is as soon as you get back under that level, when I say under that level, under the 28K level, then you have an opportunity to short with your stop loss above wherever the next local high gets printed, and then see how far you can come down. First area of interest is at 25.5. If you do start to lose that, then yes, you could go much lower. So okay, that's low time frame traders. Also low time frame traders. Still, I would say that the advantage is towards the bulls because you are holding this trend line over here. You can see it looks a little bit like an ascending triangle that's forming. And we know these ascending triangles have measured moves. So let's quickly see more or less what the measured move would be on something like this. So that could potentially take, if there was a breakout from this and it continued to hold, there it goes up to 30K. Let's put in a quick price label for you. There we go. 30,698 if this pattern continues to hold. If it doesn't, then remember we outlined a range. What was the range? The range was based on the daily chart. So you have your overall range, right? You have your range high, the main range high, blue line, range low, blue line over here, mid-range in the middle. So again, I'll remind you, we said possibility, right? That you have a deviation, and then now you have the same thing, or you could have the same thing. You don't have the same thing, but you could have the same thing. that this becomes a deviation, and then you break back into the broader range. So we are yet to confirm that. The only way we're going to know the answer to this is once the market starts to pull back and we can see if it establishes a higher low. So if you want to front run these ideas and kind of work out which way the market's going to go, we said, look, for the time being, we're treating this as a smaller range. I'm going to draw a box around just to give you a little bit of a perspective. So this is kind of the broader range, right? Range high on the top, mid-range, and range low. So you can kind of gauge and see what's going on within the market based off that range. If you know range trading, you'll know break of that trend line over here. That means you're going to target to the mid-range, which is 26.8. See what happens from there. If it breaks down to the bottom of this range, which is the previous range high, you can see that over there. Then that's showing you, what does this look like, right? A deviation. Then you can compound your shorts or just continue to hold your shorts. You break into that, and now you have a very powerful trade that can go much, much lower. So it's an if this, then that scenario. That's what trading is, guys. I am not saying that this is definitely happening. This can also happen, and I'm open to that idea. And I'll reevaluate and make adjustments based on that when the time comes. So one thing that makes me lean towards still a little bit further upside is this, irrespective of what happens with the FOMC. Let's just assume FOMC is 25 basis points, which is what we expect. Then it should be neutral and the market keeps doing its thing. Then my bias is still towards the upside. And one of the reasons is, if you have a look over here at this tweet, Byzantine General says that BTC is at 28K after a 50% rally and funding looks like this. And then he just says that's pretty interesting, right? Because you have negative funding. So here you can see it. And this is a big mistake that a lot of crypto investors make, is when prices are trending and you have a strong uptrend that's starting to establish and you can see main high time frame structures starting to break, then they don't trust the rally and they continue to short the market. And you can see that by the funding rates have gone completely negative. So that just adds additional fuel, right? That means that those shorts have to keep adding to their positions. And shorting, these short squeezes can be more aggressive, right? What is a short squeeze for someone that's new? Short squeeze is when somebody bets that the market's going to go down. So they put on positions to bet the market's going to go down. What happens is they have to keep adding to those positions as the market moves up against them. And then consequently, if price keeps going up, they have to force close their positions. By closing a short position, you immediately market buying back. So you're selling that position and immediately market buying back. That creates big upward pressure within the market. And if those shorts get squeezed out, you can imagine you're going to quickly push to that 30 to 33K level. That's where I would like to take some profit. Okay, you can see still spot driven. The market's definitely spot driven. So the leverage guys that are trying to short the market and still could get pushed out, because I don't think that this is necessarily going to sell off very hard if it's spot buys that are holding those positions, kind of like I am, right? You're looking for a big swing trade. So guys, I think that brings us more or less to the end. Please make sure you give the video a like. This is yesterday's video. Fantastic. Look at that. I think they went back and liked it. You actually got 4,000 times 25 cents. So Josh got paid very, very well yesterday. He'll have to buy me lunch. Let's see if you can beat that number today. Also, make sure that you check out the links below if you do want to get into the Discord. The Banter Hub, that's where all the action's at, right? Let's have a look here. I'll pull this across for you. The Banter Hub. This is the action-packed Banter Hub. We put all the updates, trade ideas, everything is in there for you. We give you trade setups with our P&Ls. So we've been absolutely crushing it in there. You guys are making some serious profits. Well done to each and every one of you who took these trades. Fantastic, fantastic work. If you want to get in there, guys, this is where, I can't always go live as there's a trade setup, right? This takes time to set up the stream and make thumbnails, all of that. It's a big story. So the easiest way for me to give you a trade is in the Discord. It's kind of like having me in your pocket, where you can just send me a WhatsApp message or whatever, and you're like, oh, what are you thinking? And then I just say, yeah, that's what I'm thinking. That's the trade. So to get into the Discord hub and to get into my private group there, you'll need to use either BitGet or Bybit. Sign up using one of those links below. That is mostly where we do our leverage trading. You do get up to a $30,000 sign up bonus on Bybit and up to $8,000 on BitGet. They have a lot of fantastic features and they are my preferred trading platform. So I think that brings us to the end. Okay, cool. Yeah, I guess that's the end. I'll see you all in the next one. Have a fantastic day. Appreciate each and every one of you. Make sure that you watch this on 2K. If you already got to the end now and you weren't watching on 2K, then go back and change the settings, put it in 2K. I'll see you all tomorrow. Cheers for now.
Oh, you're supposed to click the end screen, bro.
I don't have it. It's gone.
Okay.
I got it.
No, you click the comments.
I'm clicking outro. Okay, cool. Josh and James are going to figure this one out. I'm going to have a sip of my water.